Good morning. Are we ready?
Yes.
Okay, let's get this show on the road. Good morning. I'm Glenn Moorhead, the Deputy Director of Business Operations for the Office of Central Services in Prince George's County. I would like to welcome you to the Supplier Development and Diversity's 8th webinar that we are hosting as part of our series with Sandy Pruitt and Jerry McLaurin of the People for Change Coalition and the PFC Black Chamber. I'm happy that many of you were able to join us throughout these series and that you are consistently joining as we have several more informative sessions. Today's presentation is entitled Understanding Loan Forgiveness under the Paycheck Protection Program. Our guest presenter is Ms. Bernadine Merriweather, who is the CEO of Merriweather Financial Services and brings over 24 years of expertise providing tax service with customized income tax preparation for private individuals, nonprofits, and small businesses. Her services include accounting and bookkeeping support, managing payroll and bank reconciliation, financial management, budgets, program and financial statement reporting, and 3 reviews of contracting, invoicing, grants management, and project financial reporting. That's a lot. Ms. Merriweather is a graduate of St. Francis College in Brooklyn, New York, where she earned a BS in accounting, and she's also a member of the PFC Black Chamber. This workshop will guide small businesses and entrepreneurs on how to complete the application and report on your loan under the Paycheck Protection Program. You will receive information on how to reduce compliance burdens, what is required for full-time headcounts, calculate payroll, and report on allowable expenses that can be deducted. As usual, from the Office of Central Services, we have Ms. Deborah Carter, Executive Director of the Supplier Development and Diversity Division, and Mr. Christopher Kelly, Outreach Manager of the division. Again, thank you. We thank you for joining us today. And at this time, I will turn the presentation over to our host, Ms. Sandy Pruitt. Sandy?
Glenn, good morning. And again,
Morning.
thank you for that warm presentation. Again, we just want to highlight some upcoming workshops as well. Reopening your doors for healthcare business, understanding contract vehicles, costing out proposals, and understanding financial statements. We will be scheduling those workshops shortly, so we just wanted to alert everybody they're coming up. In terms of the agenda this morning, I welcome you from the PFC Coalition and the PFC Black Chamber. Our presenter is Bernadine Merriweather, and she will be doing a very interactive and engaging workshop. We're encouraging people to use the Q&A and also the online chat to post your questions, and we'll make certain we go over those questions with our presenter. In terms of the presenting organizations, the PFC Black Chamber, it's a membership organization representing Black businesses whose mission is to strengthen the capacity of those businesses to serve their communities by providing a collective voice, fair access to capital, and leadership support. The PFC Coalition is a membership organization of over 300 nonprofits and minority businesses whose mission is to build the capacity of those businesses and nonprofits by providing assessment, support, and expansion services. So we encourage everybody to get to know the organizations better. And we, again, are very excited about this workshop this morning because a number of small businesses received the Paycheck Protection loan, and we want to make certain that that loan is forgiven and that you know how to accurately report on your loan once you've expended that loan. So I'd like to, again, welcome you. And Ms. Bernadine Merriweather is going to share her screen right now.
Good morning, everyone. This is Bernadine Merriweather, and thank you, Mr. Moorhead, for that introduction, and thank you, Sandy. We are presenting this on behalf of the People for Change Coalition and the PFC Black Chamber, and I thank them very much for inviting me to present to you to their audience. So without further ado, we'll get started. One of the things that I want to do is and go over is some of the key terms of the application. We're going to review the eligible payroll and non-payroll costs. We're going to go through the application to get you familiar. We're going to review the required calculations and understand, most importantly, understand how to maximize forgiveness. Because of course, as we all have received the PPP funds, we want to know how to maximize forgiveness. And that is possible. And now with the updates, it's more possible than it was even before. So it's very exciting information here that I am very excited to share with you all.
Okay, Bernadine, you may want to hit slideshow from the beginning.
Can you see my screen?
I just want you to maximize it. So they'll go up top and say slideshow from the beginning.
Okay. There we go. Okay. Here we go. Is that better?
Yes, much better. Thank you.
Okay, great. Thank you. All right, so this just gives you an indication for each a category of employers, what will be forgiving, the supporting documentation, and the requirements. And a lot of the requirements that are listed here are based on the old rules. So a lot of these rules have changed, and under the sole proprietor in the partnership section, prior rules required that you could not exceed 8 weeks of owner compensation replacement. And now that has changed. And now the new rules are up to 24 weeks of owner compensation can be included for forgiveness. So this is exciting news because now you have a longer period in order to apply for forgiveness. But the first thing that we're going to do is we're going to start with the self-employed applicant with no employees. And these are going to be the criteria that we're going to use. So we're going to start with someone who had a Schedule C with a net profit for 2019 of $60,000. Their PPP loan was calculated at that rate and they received $12,500. And under the old rules, they were able to get a 75% for payroll and 25% for non-payroll expenses, but that has changed. And now under the new rules, they may only expend 60% for payroll and 40% for non-payroll expenses. But the real beauty of it is the way that the new application under the EZ form is formatted, they can have the entire amount that they applied for forgiven without the non-payroll costs. So let me see if I can get to a new screen here.
So Bernadine, Sandy, so who does that apply to? Is that the sole proprietors, independent contractors, or?
I'm gonna go over that right now. I'm pulling up the application. I need to get to my other screen so I can pull up the okay, so here we go. So can everybody see my screen okay?
We see your screen, but not the application.
Oh. Can you see the application now?
Yes, we do.
Oh, perfect. Okay. All right, so these are the new rules under the new forgiveness application, which was approved on June the 14th of this year. They came out with this new application and they have new rules. And so for the easy form, these are the people who would qualify. And if you follow along here, you can see on the instructions, it says the borrower who is self-employed, an independent contractor, or sole proprietor who had no employees at the time of the PPP application and did not include employee salaries in the compensation of average monthly payroll in the borrower application form. So that is a self-employed person basically who had no employees and didn't include any like 941 payroll. And then it also includes the borrower who did not reduce the annual salary or the wages of any of their employees by 25% during the covered period or the alternative period. And we'll go over what that period is compared to the period between January and March of 2020. And finally, the borrower did not reduce the number of employees or the average paid hours of employees during January and the end of the covered period. Again, we're going to go over what the covered period entails. And then the third item is the borrower did not reduce the annual salaries or wages of employees by more than 25% during the covered period. And this means only and March 31st, only employees that did not receive during any single period wages or salaries at their annualized rate of pay in the amount of $100,000 or more. Okay, so this is basically saying that any employee that you include cannot receive a pay of over $100,000 or more. Okay, so with that in mind, we are going to go to the application form and we're going to share that screen so you can see exactly how that works. So this is the new easy form application. And so on this form, it is important to make sure that you include your business legal name exactly as you did on the original form, and the trade name, address, etc. All that stuff in the top section, you have to make sure that it's the same as the original application. And your SBA PPP loan number, if you don't have that, you can request that from the lender. But most of the time you can check your PPP loan application. Most of that stuff was done online. So you should be able to go online and look at your documents and get that loan number for yourself. And the PPP loan amount is the loan amount that you received. Of course, you should be able to check your bank statements for the exact amount received and the loan disbursement amount. And that amount should match exactly what you received, because the banks were not allowed to take any fees out of those amounts. So the amount that you received is the exact loan amount. And for this example, the employees at the loan, at the time of the loan application should be 1, because we're doing a sole proprietor. So the employees at the time of forgiveness of the application, if you haven't hired anyone and if you're still the sole proprietor, then this should still be 1. So the employees at the time of forgiveness application would be right now, say if you were applying for loan forgiveness today, and so whatever number of employees you had, that's what would go on that line. And for those who have received the EIDL advance amount, in this case, that person received $1,000. So you would put that amount on that line. Now, the EIDL was giving out $1,000 per employee. So if you had 2 employees, then that amount would be $2,000. And if you had 3 employees, that amount would be $3,000, et cetera. So you would put, but for this example, and since we're working with a sole proprietor, that amount is $1,000.
Now, Bernadine, are people penalized for getting that EIDL advance, that grant, or is that not impacting how they're reporting on the Paycheck Protection Program?
Yeah, it doesn't seem to be impacting the loan forgiveness at all, but I don't know why they're asking you for it, because it really does not impact it in any way. But it's information. I guess they just want to know who got it. And so you would check your EIDL application number. Again, that application was done online too, so you should be able to go back to your emails and check your application number. I think it was like a 10-digit number. Most of them began with a 3. So you should be able to go back to your emails and find that application number. For the payroll schedule, it says the frequency with which the payroll is paid to employees. If you pay your employees weekly, or you pay yourself weekly, or you pay yourself bi-weekly, or whatever, you want to put that down. But in this case, it doesn't apply because this is for a self-employed person who doesn't give themselves payroll. They just it's based on their income from the company. So, but if it does apply, then you would just pick whatever frequency applies to your business. Okay, so in this example, the person received their disbursement on May 27th. So for purposes of the application, the covered period, if they chose, because you have a choice here, if you receive your PPP before June 1st, and in this case they did, so you would put down the date that you received it plus 8 weeks, and that would be the covered period for purposes of the application. But if you want to choose an alternative covered period under the new rules, which would be 24 weeks, then you would choose the alternative payroll covered period, and you would put down 5/27, that's the date you received it, and then you would put down whatever date that would be 24 weeks later.
Bernadine, a few people are asking about part-time employees and how do they note that under the new guidelines. Someone said that they reported 4 part-time employees, but they were only able to keep 2.
Right, so we'll get to that in the next
loan forgiveness,
because we're going to go over that one as well.
Okay.
So this particular one is an easy form, and it's going to cover for the people who we talked about originally, the self-employed persons, or the persons who did not have any changes in their full-time equivalent employees. And this application is for those folks. But if you had some changes, we're going to go over that next, and that's going to be of course, a more detailed application form. So we have that coming up. So stay tuned. So in this example, like I said, you can choose either the 8 weeks period, the 8-week period, or you can choose a 24-week period. And so you just have to calculate what the 24-week date. And so in this case, if the person chose the 24-week period, then the covered period would end in November. But you cannot go past December 31st, whatever date you pick. If you didn't get your loan until like today, and your 24 weeks would take you beyond December 31st, you cannot choose a date beyond December 31st, 2020, because that's when the forgiveness program ends. So in this example, and then also, even though you may choose a 24-week period, you can apply for forgiveness before that 24-week period ends. So say in this case, the person has chosen the 24-week alternative payroll covered period, and but their PP funds ran out in, say, like in August or September. So as soon as their funds run out, they can apply for the forgiveness. You don't have to wait until the end of the 24-week period, but you have that long if you require that much time. So that's the beauty of it. If it just gives you a longer time to qualify for forgiveness, which is a sweet spot. And so in this case, the payroll costs would be the amount of the loan in this case. So let's go back to the application to show you the instructions. So in this case, in the case of the owner compensation, so that's the one that we're looking at. We're looking at line 1. It says here a forgiveness amount calculation. So we're looking at the owner compensation because that's what the person had. And so based on this, I'm going to read what this says. It says, enter any amounts paid to owners, which includes owner employees, a self-employed individual, or a general partner. For a 24-week covered period, this amount is capped at $20,833, which is 2.5% of the maximum $100,000 per year that you were allowed to apply for. And for each individual, or the 2.5 equivalent of the 2019 compensation, and they're saying whichever one is lower. So that's whatever one you applied for. And for an 8-week covered period, the cap would be the $15,385. So that would have been the max that you would have gotten. And that amount is the amount that you can apply for forgiveness for in this application. So that is your total payroll costs. And so you were allowed to put that down. And so if you are a self-employed person, you don't have to include lease payments or utility payments or anything. So those amounts would just be zero. And so you would go to line 5 and you would add up all the amounts on there. So of course that would be the $12,500 of payroll costs. And the PPP loan amount was $12,500. And then they're requiring you to divide the $12,500 by 60%. And that gives you that maximum that they're talking about in the application. So you see here where it says the $20,833, that's the maximum, that you would have been able to get. And so that is the amount that comes to on line 7. And the forgiveness amount is the smallest of any amounts on 5, 6, and 7. And believe it or not, it is just that easy. And that is the amount that you would be forgiven. So in this case, for self-employed persons, it is easy as that to have that entire amount forgiven.
Now, Bernadine, what if someone just got their PPP loan?
Right.
Do they have to stick to that covered period, or if they've already had payroll costs prior to that period, are they able to apply that, or do they have to start with the covered period?
So on the instructions, it specifically says that the covered period let's see, what it says that. The covered period starts on the day you receive the loan. Where does it say that? But yeah, the covered period basically starts on the day you receive the loan. You can't spend money that you haven't received. So here we go. It says, enter the date that you received the PPP funds. The loans were received on more than one date. Enter the date you received the loan proceeds. Okay, let's see what it says that.
And so Bernadine, in terms of paperwork, whoever they got the loan from, is that where they'll get their application number?
Yes, and the application as well, because the SBA has, given the banks the money, and the banks are the ones that you have to go to apply for forgiveness. So your bank is, and some banks may have a different application from the SBA, even though these are the SBA rules. From what I understand, some banks have their own applications. So you have to follow the guidance of your bank on that.
Some people got their loan, their PPP loans from QuickBooks. So you're saying that whoever you got the loan from, that's who you should go back to for the paperwork.
Well, I mean, they might have gone through QuickBooks, but it was a bank who gave them the loan. So whatever that bank is that gave them the loan, then that's the bank that they would have to deal with. So I don't know what bank QuickBooks was using, because I don't know anyone who got their loan through QuickBooks, but whatever bank it was. And it should say it on your loan documents what bank it is. If you're not sure, then just go back to your loan documents that you have, that you signed, and it should tell you what bank it is. But the bank should be contacting, contacting everyone that they gave a loan to, and give them information about the loan forgiveness application process. It should be.
Is there any advantage of doing, I guess, the 8-week period or the 24-week period, or people just have that luxury of that option right now?
You just have an option. It's totally up to you. So if you want to take the 56 days, or, some people may need to, if you have, like, say, if you have employees and you couldn't pay all of your employees, that was the problem initially. You couldn't pay all your employees in that 8 weeks. So you need an alternative covered period. So they gave you an option to do it, to be able to apply for forgiveness and use those funds over 24 weeks instead of using those funds over 8 weeks. So that's the difference. So you have to choose based on how you spent the money, because you're going to have documentation for all of this. And we're going to go over that shortly as well. So you're going to have to be able to prove that you paid the people if that's what you did. And then you're going to have to be able to, or even if you are self-employed, you have to send them copies of bank statements. Okay, so one of the other parts of the application is the certifications. And basically these are certifications just verifying that you are being truthful about everything that you reported. So this is really important. And so we need to go over this, just very briefly, and you can always, read it on your own. We're going to go over it real quick, but so you're certifying that the dollar amount for which forgiveness is corrected was used to pay costs that are eligible for forgiveness, for payroll costs or whatever it is that you put on your statement. You're just pretty much verifying that is that is the truth. And then the next one says, I understand that if the funds were knowingly used for unauthorized purposes, the federal government may pursue recovery of loan amounts and or civil or criminal fraud charges. So they're making you sign this, basically saying that, you have to prove that you used it properly, or, there's going to be consequences.
Now, Bernadine, what if somebody does not use the entire amount? what should they do? Would only a portion be forgiven, or do they have to return the rest back or continue to
That's
pay?
something that they can talk to their bank about, I'm sure. But I would think that, you know, having the 24-week period gives you the luxury of being able to spend it all. So that's the whole idea of giving you a longer time to, you know, to report it. So now you have, instead of having 8 weeks, now you have 3 times as much time to spend that money. And so you have to, so, you know, I would say hire someone. Hire someone to help you, you know, but you still have time because you have 24 weeks to spend that money. And that was the problem, because a lot of the business, remember, they couldn't open up at first because everything was shut down. So, but people had applied for the money, but they didn't spend it because the businesses were shut down. So that's why they gave us, you know, they gave everyone, you know, the 24-week period to spend the money, because those mandates were, you know, federal and state mandates, and you had to comply. So you didn't have a choice, and a lot of businesses didn't have a choice. They couldn't spend their money because they had to shut down. They weren't required to stay open. So, and then you have to certify that the borrower did not reduce salaries or hourly wages by more than 25% for any employee during the covered period, because if you did, then you couldn't use this application. So they're just asking for that certification. That's a real important one on here. And that any amount that was submitted here, the salary didn't amount to more than $100,000 a year. That was another requirement for using this. And the borrower has accurately verified the payments for the eligible payroll and non-payroll costs for which the borrower requests forgiveness. So again, you're just certifying all this stuff, and you would verify it by sending in documentation. So it says, I have submitted to the lender the required documentation, verifying payroll costs, existence of obligations, and service prior to February 15, 2020, and eligible business mortgage and interest expense, business rent and lease payments, and business utility payments. So one of the things that's going to happen is you're going to have to, if you're, I'll say for instance, you own the building that you are in and you're paying a mortgage on it, or you have a home office and you're charging, you know, you're charging your home office a rent fees. So you have to prove that you had that mortgage in place before February 15th. So you're going to have to prove that you had your lease in place before February 15th, and that you had your business utility payments in place before February 15th. So in addition to, you know, to showing documentation that you spent money on these things during the covered period, you're also going to have to submit documentation showing that you had these costs before the pandemic started.
So Bernadine, what if somebody's sole proprietor working from home? How are they documenting use of home? Or how does that factor into the loan forgiveness application?
Okay, so they should, if they're a sole proprietor working from home, then they should be able to qualify for the total loan forgiveness without even including any utilities. But if they have to include some utilities because they're on salary and it didn't, you know, cover the 60%, and they want to use the 40% for utilities and things, then they would just have to make sure that the business is being charged a specific amount by the owner of the property that they're living in. And if that's them, then that's their home. They're going to have to come up with some way to make sure that the business is paying for that space, because that's part of what documentation you have to show. And that's what normally should happen anyway. You should be charging your, you know, your business rent, or some people have the, you know, the businesses pay their utilities and as part of the rent. So just all kind of, you know, and you have to just have an agreement written up and show that the business is paying those expenses. And that was the case before February 15th. So there's a lot of different things that, that can be done. And you can also talk to your banker about, how to submit the paperwork, because they're the ones that's ultimately going to have to approve it. So it's probably best to talk to them more
So
than
one
anything.
thing, if somebody receives the Paycheck Protection loan, they get the check, that check should be deposited where? Into their business
They
account?
get a check for the PPP?
Or, well, I don't know if they receive the check. When they get the funds, where should the funds be deposited? Somebody's asking that question.
Because the bank, because I haven't heard that anybody's received a check for the PPP. Most of the time, what I have seen in like 100% of the cases that I have been working with, I have seen that the bank requires you to have a business account in the name of the business that was applying for the loan, and they mandate that you give them a an account number and a routing number that they can deposit the money into. So that's what I have seen. But I would say if you receive a check and that's the case, then it should definitely go into a business account. But if you are self-employed and you don't have a business account, I guess it would have to go into your personal account. But it would just depend, because a bank probably won't let you put a check written to a business into your personal account. So it's a whole thing that you would have to work that out for sure.
Okay, another question. Someone's still unclear about how to calculate the capped amount per individual. And they're basing it on a loan amount of $30,000. And so they're trying to figure out what's the capped amount over the 8-week period.
You're talking about a PPP loan?
Yes.
Oh, okay. So that must be a business that has employees then. So that would be covered in the next application.
Okay.
Okay, because this one would not go over the 20,833. This was capped at 20,833 per individual.
So the max that someone could get as a sole proprietor under the PPP
was based on $100,000, right? Divided by 12 times 2.5. So that max was 20,833. So that is the max that they would get. If somebody got 30,000,
then it wasn't a sole proprietor.
right?
Okay, great.
So we'll cover that in the next application form. Okay, so then so these are pretty much, you can read, they just have questions about, certification about your tax documents and what you need to submit, but you just need to understand that these are things that they're going to be looking at. These are things that they're going to be taken very seriously, and you basically have to sign off on this stuff, or you won't get your loan forgiven. And so for the sole proprietor, they have made it so easy, and that is a wonderful thing. And as a self-employed person, you should be happier, and you have longer to spend the money. So, it's so much easier now to qualify for that. So let's go on to the regular application, and that is the one that is the most tricky. But it's also a lot of good stuff in here that they've added in the update. So this is the application that's been revised as of June 16, 2020, and all the information at the top, of course, is the same. You have to request this information from your lender if you don't have the number, but you can check your emails, all that, everything's the same. Now, in this particular example, we're going to use, I guess for ease of calculation, we're going to use this person got a PPP amount of $100,000. And they got their loan on May 1st. Right, so that person had 10 employees at the time of the loan application, and they have 5 employees at the time of loan forgiveness. So, and because they had 10 employees, the Eidl advance amount was $10,000, of course, because if you remember, they were giving out $1,000 per employee. So in this case, they would have gotten $10,000. And then of course you have to get that loan application number from your form and fill it out here as well. So in this particular example, the payroll schedule is bi-weekly. So what we did here is we had the covered period. Well, if they got the loan on 5/1, it should have been 5/1, and 2 months later it would have been July 15th. So my dates in there need to be corrected here. So we're going to use the covered period of 2.5 months, and so and based on
So Bernadine, they're getting 2.5 months versus the 8 weeks, or?
I guess that's the old rules, right? I think because I had this application filled out before when we did the old ones. Yeah. So this would be, so the 8 weeks would be right. So the 8 weeks would be what? Let's see, let's calculate that exactly. So if I go to May 1st, it will be 1, 2, 3, 4, 5, 6, 7, 8. So that would be June 26th would actually be their date. Okay, so in this example, so the new rules require that you can use 60% of the cost for payroll. So what we did in this case is we had the payroll cost at $60,000, and since they had a lot of rent costs, we have $40,000 for rent and lease payments, and no amount for utilities because this person was paying a lot of rent. And so we didn't include any utilities in there because at that rate the $100,000 is used up. Okay, so one of the things that you would have to do to continue on this here, right here, so it's adjustments for full-time employees, you would have to go to the application, Schedule A. So they have a worksheet here, right? So this one here, it says here, you would go to Schedule A, get the number from Schedule A, line 3. And so you would be picking up whatever number was on that line. And so one of the things that has changed in the new application is, so you want to be able to have, zero on this line in order to have the amount forgiven. But in this example here, right? In this example, the wages were reduced by 50%. So I don't have the application Schedule A filled out, but in this example, you see on line 7, that is the quotient from Schedule A. And what happened in this case is they, had to reduce their employees by 50%. So when that happens, their wage reduction amount was 20,000. And so so we put the $20,000 on line 5. And then when you add up those amounts on 1 through 4, and then subtract line 6, subtract line 5, then on line 6 you have, that's how you get your 80,000 in this example. And so what happens is that is going to affect your loan forgiveness amount, because at this point, so now then you have to, use the 0.5% or 50% of the 80,000, and that's how you get the amount on line 8, and that's $40,000. And then the PPP loan amount is 100,000. And then if you divide the $100,000, let's see the amount on line 1. So if you divide the $60,000 by 60%, then you will get $100,000. And if you would, and on line 11, if you were to choose the lowest of 8, 9, or 10, that would be 40,000, and that would be the amount that you would be forgiven. And so if you had to reduce your employees by 50%, you can see how you would only get $40,000 of this amount forgiven. And that would be a tragedy, because that's not what people are looking for. So, and I went to, to do an example like this just to kind of show you exactly what can happen if you have reduced your employees by 50%. But under the new
what about the rent or lease payments? Is that factored in? Do they still get to forgiveness on that amount, or plus the?
So this is for everything. Everything is reduced by 50%.
Even the rent?
Yeah, everything. So this is how it's calculated. If
wow.
That's what I'm trying to show people. If you reduce your salaries, but hang on, because there's good news. This is just a scenario just to show you where we're going next, okay? Because most people want to have this number on line 11 to be $100,000 forgiven, because that's the amount that they received, and you want the amount on line 7 to be 1, because you want to have 100% of the of the money is forgiven. And then you want your wage reduction on line 5 to be 0. Now with those scenarios, you can get 100% forgiveness, and I'm going to show you exactly how to get that done. So that's the good news. So let's go down.
How do you get around if an employee voluntarily quits right in the middle of you getting your PPP loan? The employee quits and says, I'm, getting another job, or I'm no longer working, or I'm staying home with family. What do you do?
Well, you have the option of replacing them. In the original CARES Act, that was not the case, but now you have the option to replace them. As long as you have the same number of people, you know, at the end, that's what matters. So I'm going to show you that stuff now. I'm going to show you exactly where it says that on the app, on this new application. And this is the new one, revised June the 16th. So when you are filling this out, make sure you have the revised application, not the old one, because the old one won't have all this new information in it. Okay, so this is all like really, really good stuff. So when you're, one of the things that you have to do when you're filling out, you have to fill out these worksheets, right? And so, and they have, but they have new rules for the worksheets now. So on, right here is one of them. So if you go down to line 13, line 13 is the most important, is one of the most important pieces here. You want this number on line 1 to be a 1, okay? You don't want that to be, your reduction quotient to be 0.5, which is 50%. You don't want to be 75%. You don't want to be 25%. You want it to be 1. And so they put a lot of new rules in that will help you get there. And so, and that's one of the beauties of this new application. And that's what I really wanted to share with everyone today. So, and then the other piece is, like I was saying before, you want to be able to have a 0 on this line. Okay. So this line is, if you have, if you can put a 0 on that line, then you would have 0 reduction, and then all of your loan is forgiven. So this is the salary and wage reduction line. You want this to be 0. If this is 0, then you have no reduction, and then you have the ability to get your 100%, your loan 100% forgiven. And so, so we're going to start here. And so one of the things that they have here is that it says, enter the wage reduction. Let's see, let's go down to the full-time equivalence, because this is the thing that hurts people right here. So they have this new thing here. It says here, it says full-time equivalency reduction calculation. Does everyone see that here? So this right here. Yes. So this part is the important part that you need to pay attention to. So it says, if you satisfy any one of the following 3 criteria, so not all of them, but just one, then check the appropriate box, skip line 11 and 12, and enter 1.0 on line 13. Now remember what I said before, if you have a 1 on that line, then you'll be able to get your loan totally forgiven, because that's your reduction quotient, and your reduction quotient, it won't be 50%, it won't be, 25, it will be 1, and you want to be 1.0 because that's, basically 100%. So one of the things that that they did was, so the first thing is you had no reduction in employees or the average paid paid hours. So if you have not reduced the number of employees or the average paid hours of your employees between January and the end of the covered period, then you can click there, and then you can put a 1 on line 13. So that's an automatic 100% loan forgiveness.
So Bernadine, say that again. So what I'm hearing is, if you had 5 employees when you submit the application, 5 employees during the covered period,
before the covered period, and then you had the same thing after, and you did not reduce the hours of, and you paid everybody's average wages the whole time, and you never changed anything. So if you had those 10 employees in this example, and you paid everybody, and then you when you started the application, and then when you finish the application, then you can and you never changed anything, then you can click that box and then you qualify for no reduction in quotient.
So Bernadine, what if people brought on new employees? Let's say they submitted their application with the 5. Then during the covered period, 3 of the employees stayed. 2, they had to bring 2 new employees on because the other 2 didn't come back. Does that still weigh out to 5 and 5? And if the salaries were the same, or?
Right, so that's a whole nother one, but that's still like, but yes, that still qualifies them for no reduction, exactly. So that's what these new safe harbor rules do for you. So we're gonna go to the next one. I think it's gonna be covered in one of these coming up. So it says, the second one, it says, the full-time equivalent reduction safe harbor, if you were unable to operate between February 15th and the end of the covered period at the same level of business activity as before February 15th, due to compliance with requirements established or guidance issued between March 1st and December 31st by the Secretary of HHS, the Director of the Center for Disease Control and Prevention, or the Occupational Safety and Health Administration, I guess that's OSHA, related to the maintenance of standards for sanitation, social distancing, and any other worker or safety requirement related to COVID. You can check here. And so as far as I can tell, this is like every business almost, because everybody had to, you know, live up to the standards of what the government was telling them, either local government or federal government standards. So, you know, as far as I can see, under the new rules, almost every business qualifies. If a business doesn't qualify, I would be very surprised. So this is very good news. It helps almost everyone qualify.
So this is the safe harbor reduction?
Yeah. So this is the safe harbor 1, okay? And then if you did not qualify for 1, then you can qualify under 2. So it says if you satisfy the full-time reduction harbor, see PPP A worksheet and click here. So that's the other part. And that's when you can go to the, let's go to the worksheet. So you see here, so they said, if you enter the salary and wage deduction in box 3, and that would be, let's go to that application. Box 3 is right here. So once you put in all of your salaries for your people, put the information here, their name and their identifier, how much you paid them, and that would be their gross wages. And their average full-time equivalent should be 1. If their hours was reduced, if this amount is, I think they said 75%. So if you reduce their amounts by 75%, so they're saying here, it says here, enter the salary and wages from box 3 from the PPP Schedule A worksheet table 1. That's the one we were just looking at. If the average annual salary or hourly wage for each employee listed on the PPP Schedule A worksheet table 1 during the covered period or the alternative payroll covered period was at least 75% of their annual salary or the wages that they had prior to the COVID, then you can check here and you can put 0 on line 3. So that is good news as well. So, you know, I feel like they're making it much easier for you to get loan forgiveness now. So that is good news, because if you have 0 there, then you have no reduction, then everything is forgiven. So that is really, really good news. So they're, like I said, they're making it easy, but you have to go through the calculation for all your employees, list out all the information here like they asked, and then see what your numbers come out to. And they said if you're paying them at least 75%, then you would still qualify. So that's good news for a lot of people, because even though you had to reduce it, you know, depending on what the number was, it was at least 75%, then you can get the total amount of the payroll protection funds forgiven.
So Bernadine, is this during the covered period or the alternative covered period?
Both.
Both?
Yeah, it says it right here. It says during the covered or the alternative covered period. You see that right there?
Yes.
Yeah. So yeah. So they're giving you, and so you would, and you would click that button, you know, you would click that little box and enter 0 on line 3. So they gave you a lot of good outs in this, but you have to go through the whole calculation, because you still have to provide these calculations to your bank to show how you got to that amount. But I'm just showing you these quick little fixes that are going to help you get to the point, you know, where the loan is forgiven, and the little important pieces that you need to pay attention to get the loan forgiven. Let's see what else here. So yeah, that was the biggest thing, you know, was that this information right here, this stuff right here, the safe harbor rules, all this down here at the bottom. Yeah, all of this right here. So this is if you qualify for one of those 3 categories, and even if you don't, and then you go to the, you know, the worksheet, and you qualify, you know, based on this information right here, then, you know, you still would be able to get it forgiven. So they're giving you a lot of leeway to get your loan forgiven. So, and I think that's the beauty of this PPP funding, you know, because they really are trying to help businesses. They really are trying to help them to qualify for forgiveness, because it's supposed to be help that they are given to businesses during this time, and then to turn around and have it not forgiven. I think because it came out so quickly, they didn't have a chance to think it all through. But once they thought it through, and of course with the help of the AICPA fighting them on all of this stuff, they were able to get everything changed so that it can really benefit the businesses. Because, you know, because once they started doing these calculations, a lot of businesses were starting to see that, you know, they weren't able to get forgiveness. It was looking like this. And they were like, oh my God, this is not good. So they had to go back and they had to make some fixes. Yeah, because this is what you want your application to look like in the long run. You want it to look like this. So if you have your payroll costs at 60% of the 100,000, and then you have the lease expenses at the 40,000, and you have no wage reduction, then you're able to go through the calculation and get your quotient at 1. And once it's at 1, then you're able to get the total amount of the loan forgiven.
So Bernadine, what happens if it's, somebody's asking, what happens if it's more than 25% reduction in wages?
Is it more than 25% reduction in wages?
Yes, if the wages are reduced more than 25%, because I think this allows for no more than what, 75% of the wages. What if it's 25%?
Right. So if the wages are down to 25% of what it was full time,
yes,
then you're going to have to go with the calculation. But remember, you have the safe harbor rules. So you have the safe harbor rules as well. So you might still get it, you know, your reduction quotient might be 1, because because most businesses fall into that safe harbor 1 rule. So they need to look at everything. And so I really wanted to bring this to everybody's attention because this is huge. So you need to go through the whole application, need to make sure that you take into account if you apply, if you qualify for any of the safe harbors, then you're going to, it says it right there at the top. If you satisfy any of the following 3 criteria, check the box and then skip lines 11 and 12 and put 1.0 on line 13. Otherwise, you got to fill out 11, 12, and 13. But they give you a lot of scenarios to help you qualify. So I think that most businesses would be able to, because a lot of people couldn't operate because their businesses, you know, the county said you have to shut down. So a lot of people had to shut down. So I think that a lot of people would be able to get the safe, you know, get the reduction, the full-time equivalent reduction under the safe harbor, and they wouldn't have to worry about that. But again, you have to go through the numbers. You have to go through all the numbers on that, you know, on the form. You have to put all your employee information down, then you have to go back and do this calculation form and make sure that, and this is the PPP forgiveness calculation form. So you have to go through all of these numbers to make sure, you know, where you end up.
So Bernadine, people still have to provide supporting documents as well.
Correct.
Even if they go the safe harbor route, they still have to provide documentation.
You still have to show that you know, you can put it on the form, but you have to get your payroll reports to prove it. You know, to show that, yeah, this is what I paid this person, this is what I paid, because you're going to take it from those payroll reports. That's how you're going to fill out your form. You're going to get your payroll reports and you're going to get that information. So you should be able to, you know, that's how you're going to calculate, that's the information you're going to use to calculate that form. So you should be able to have that information available to provide to the bank to, you know, to prove your point. You know, it's like I put this in here and this is my documentation to back it up.
So Bernadine, do employers have the 24-week period or still the 8-week period to spend those funds from the PPP loan?
So you have a choice. They're giving you a choice. And that was the whole idea of the update. The updated rules are you can choose whatever period works for you. If the 8 weeks doesn't work, then you can choose the alternative 24-week period. And you can put it down there, but like I said before, you don't have to wait until the end of the period to report, you know, what you've spent. If you spent it all, you know, like say in the case of the dates of the application, you know, it was May 1st to June 26th. So in this case, if they spent the money, if they chose the alternative covered period, so they would have from May 1st, they would have 24 weeks after May 1st. They could choose that date, and whatever that date is, they would put it in there. And then, but if they spent the money before that 24 weeks, say they spent it at the 20-week mark, they can just file for forgiveness at that point.
Somebody's asking about what are the best documents to show your rent payments?
They want a copy of like if you have a rent statement that your landlord sends you every month, they want a copy of that. They want a copy of a check showed you that you paid it. They want a copy of the lease that's shown that you went into this lease before February 15th of 2020. So those are the documents that you're going to have to submit. So let's go over documents.
And in terms of business utility payments, what are they looking for?
They're looking for your bills. So, and they're looking for, first of all, they're looking for a bill that shows that you had the bill, that you had the bill prior to February the 15th, 2020. And then they want all the current bills that you were, you know, putting down on that line saying that this is what you spent. And they want to see the clear checks. They want to see the actual bill. Like I said, they want to see the bill and they want to see the bill payment. and they want proof of both.
So Bernadine, if people are making payments electronically directly to through their bank, do they show copies of their bank
Yeah,
statements?
they can show the bank statement and highlight the payments that they're trying to support. So yeah, but I think it's good news. I think they made it a better program, for forgiveness for sure. So I'm sure a lot of people were, were like really like spazzing out over the fact that they had the, reduction in loan forgiveness. So that's what I believe. That's what made them go back and reevaluate what they had originally approved.
Somebody asked if applying for payroll forgiveness, will just pay stubs be enough, or do you have to have the payroll report?
Yeah, you have to have payroll reports. A lot of if you're doing your payroll through a payroll company, most of the payroll companies that I've been working with on behalf of my clients, they are, they all have PPP payroll reports for you. So you can easily get that. If you're doing it on your own, then you should have, should be using some kind of payroll program or whatever, and you have to provide reports. They do want to see that, they want to see that you're paying people, and they want to see but I think they said if you're going to submit payroll reports, it has to be from a third party payroll provider. So if you're using QuickBooks Payroll, you're using Paychecks, they're using ADP, like that. It has to be a QuickBooks Payroll provider that is giving you those reports, in like an independent. It's not something you can like make up yourself, basically.
Okay, someone asked in terms of showing bank statements, what if their utility payments are not in the same account where the payment was deposited in?
You'll have to, give them some kind of statement that shows. I would probably go to the, you can go online to like maybe your utility company and show that the payment was made, and show that, and show that, you paid it from a credit card or whatever, wherever you paid it from. You have to just, show them wherever you did pay it from, so that, they can know that you paid it. It wasn't somebody else that paid it. Because you were supposed to use the funds that they gave you to pay that. So they expect for you to use it. So I would say to everyone, use the account that they put the money in to pay those expenses if you're trying to use those expenses to get forgiveness.
And so again, they have 24 weeks to do it. So
yes, so you still have time to fix whatever.
Use those accounts.
Yeah. Yeah. A lot of good stuff. They had a lot of good stuff in this one, though. I was really impressed with it. But they just made it so much easier this time around. Because the last time, a lot of the people that I started doing those loan forgiveness applications for, they were coming up short. So this time around, it's looking much better for most of the businesses now. Are there any other questions?
I'm looking, someone is asking about payroll cost. Are
Mhm.
those forgivable?
Yeah. What do
So
you mean?
a cost associated with the payroll.
Oh, okay. So other than just payroll costs, what costs are forgivable? Okay,
Yes.
so it depends on what the employer is paying. If the employer is paying medical for the employee, then that could be included. They pay them vacation pay, sick pay, but that's usually part of their, you know, of their W-2 wages. And if the employer is paying retirement benefits, and that's retirement benefits that not that the employee is you know, has as deductions, is the employer, say the employer had like a, you know, a 3% match for the retirement plan, the 401k plan or whatever, then that would be deductible as well. That would be part of the total payroll costs. So that can be included in there. And any bonuses, commissions, and some people are doing hazard pay now that it's, so that would be included in the W-2s, and that would be includable in payroll costs. But it, you know, but think of costs that the employer is paying for. It's everything that if you're paying for, you know, those type of benefits, then those are part of the payroll costs other than just the gross wages.
Okay, and Bernadine, someone said they're still a little bit confused about the 100% forgiveness
Mm-hmm.
when the amount is capped for individuals, because their loan was higher than that capped amount.
And they're a sole proprietor?
Yes, they said they're a sole proprietor and they got 30,000. So their amount was larger than the capped amount. So how do
But it
they?
must have included some benefits. That's the only way. If they got, because the amount was capped at 20,833, but if they received more than that, it must have included some other you know, payroll costs. They might need to go back and find out exactly what that entailed. Because according to the rules, you know, even when you're applying, you couldn't use more than 100,000. And if you do the $100,000, if you just do if you go back to the PPP application and you put in 100,000, and like I said, and you do, you know, you divide that by 12 and times it by 2.5, like you were supposed to do on the original application, you're not going to come to more than 20,833. So unless you included other things in there, you know, other employee benefits, then there's no way you could have gotten to that. You know, depends on how you calculated it in the beginning. You know, may want to go back to your lender and ask questions.
Okay, now Bernadine, what about taxes? What taxes can be forgiven under the Paycheck Protection Program?
Oh, okay. So you can use, okay, included in the payroll costs. That's another good one. So the taxes, the only thing you can use is the state unemployment. Right. So that's another one that can be included in there. Your state unemployment and your, but not your state withholding. So only the, you know, if you're a Maryland resident or DC, it's the DC unemployment or Maryland unemployment that can be included, or, you know, Virginia unemployment. It can be included in the payroll costs as well, but not the state withholding. Because again, that is an employee deduction. The state unemployment is an employer cost, and that is allowed to be included in your payroll cost. So maybe, you know, an accumulation of those amounts helped that person get up to 30,000, but I can't imagine that it was that much.
Are any type of loans, payments that businesses are making, or can those be included in the amount forgiven?
only if it was part of the mortgage interest. So they're not really giving you that much guidance on additional expenses. I don't see too much more guidance in terms of, they're just sticking to, you know, like the interest, you know, the mortgage interest, rent, utilities. That's pretty much all I'm seeing when I look at the instructions. I don't see where they've, you know, lacked any rules on that. You know, and they were talking about that prior in the prior one, but this one I don't see where that is a, you know, is talked about.
Someone's asking if you're paying employees with the 1099, can that be included in payroll?
No, because those persons can go and apply for their own PPP protection loan.
Bernadine, can you highlight the safe harbor one more time so people can really understand that?
Okay, let's go over that again. Yeah, I'll be glad to go over that. So let's just read it again. All right, so if you are satisfy any of the following 3 criteria, check the appropriate box and skip lines 11, 12, and enter 1.0 on line 13. So these are the 3 criteria. So you had no reduction in employees or the average paid hours. So if that was you, then you can put 0 on line 11 and 12 and put 1.0 on line 13. Or if you had a full-time equivalent reduction safe harbors, if you were unable to operate between February and the end of the covered period at the same level of business activity as before February 15th, due to compliance with the requirements established or guidance issued between March 1st and December 31st. Now remember, you cannot go beyond December 31st for anything. So if these requirements that were put in place by the Health and Human Services Secretary, by the Center for Disease Control, or by OSHA, related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19, then you can check the box and you can put 0 on line 11, 0 on line 12, and 1.0 on line 13. And so I, you know, as far as I'm concerned, this is, you know, is related to like almost every business that had to shut down. This was a federal and a state mandate, and, you know, businesses just did not have a choice. And so if you did not have a choice, they're giving you this safe harbor. And they're saying if you had to, you know, shut down and everything is, you know, was different because of, you know, because of what these people said you had to do. And that, you know, as you know, the restaurants and hair salons and, you know, all these other businesses, barbershops, and a lot of different business, they had to shut down for at least 2 months, and they didn't have, you know, they didn't have a choice, but they were able to apply for the PPP. So a lot of them were able to get some funding, but they couldn't open. So because of that, you know, they don't get to suffer because they don't have the full-time equivalent quotient of 1. So they automatically will get pushed to the 1.
Okay, Bernadine, we have a few more questions. Someone's asking, next year when they file their taxes, do they have to report the dollar amount given to them? What type of income is it considered, or how do they report that when they file their taxes the coming year?
Good question. So So what I tell everyone is to report the PPP as a loan when you first get it, because that's what it is. Until it is approved for forgiveness, it is just a loan for now. And then you want to report it as a gain on your books when you get it forgiven. So basically, it's not part of your operations, so you're not going to have it on your profit and loss as operational income. You're going to have it at the bottom of your profit and loss as gain income, as regular gain. So it's just it's like a grant, but like, as you know, profitable businesses don't have grants. So you have to report it as a let's see, I had some information on that. I'm trying to find it now. But yes, but that's basically how you would report it. You would definitely not report it as business income, because it's not business income. But it is going to affect you tax-wise, because say the expenses that you use for the PPP are going to be deductible, but you also have to report the amount of the PPP that was given you to cover it. So, so that amount will be taxable to you next year as part of the, the total income for your business. I'm sorry, the total profit for your business, not total income for your business, but total profit for your business. It will affect the profit at the end of the year, and if you have a lot of business and you don't, and your expenses are the same, then it will probably cost you more in taxes this year. But I wouldn't worry too much about that, because that's another thing that the AICPA is working on, trying to get it, get that fixed, because it's not fair. This is supposed to help businesses, and now it's going to cause them to pay more taxes in 2021 on their 2020 income. And so this is something that they're also working on. So we hope that, that this piece will also get fixed. But at this point, there's no, there's nothing. We're hoping that this new HEROES Act, it will include that. But, we haven't, nothing's been pinned yet. So we don't know if that's going to be a reality. But, they are saying that would be the fair thing to do, because again, this is supposed to help businesses, and now it's going to hurt them. So, so we'll have to see how this all plays out.
Bernadine, another question. People are wanting to know, what is the major difference between the EIDL and the PPP loan?
The major difference is that the PPP can be forgiven and the EIDL is totally a loan. It's totally a loan. It is not forgiven, it is a loan, and you can choose to take it or not take it. The advance is a grant. So the advance is and that's another thing that, it's not clear whether that's taxable or not. So there hasn't been any guidance on that at all. So we don't know if that's going to be a grant, or, is it going to be like a non-taxable grant, or is it going to be a taxable grant? But we don't have any idea at this point. And the EIDL is just a low interest 30-year loan that, businesses can choose to take or not take. And the
Someone's asking if they had to buy 2 commercial ACs for the business. I guess they're wanting to know, should they do that under the EIDL because it's not covered under PPP? What? Right.
So yeah, so you definitely don't want to include that in, you don't want to use your PPP funds for that, because that's just supposed to cover your payroll and your rent and your utilities. So you want to stick with those things, because that's how it's going to get forgiven. If you have to get anything else, then the EIDL is definitely for, for your basic operational expenses. So it can cover whatever your other business needs are that you would have been able to cover had your business, stayed operational, and not been affected by the pandemic.
Okay, Bernadine, in the beginning, you did that nice slide that really highlighted the different types of businesses and what was included under the loan forgiveness. Would that be something we can share with the attendees after the presentation?
Let's see, which one? So this one? Let's see.
Yes, I think that might be something that we can share with the participants.
But it needs to be updated because the requirements have been changed.
Okay, okay.
This was from the old one, but yeah, this one is, it says you cannot exceed 8 weeks of owner compensation. That has been changed. Now you can actually go up to 24 weeks. So
okay, so maybe if we can update it, we might be something we can share.
It needs to be updated.
Okay, all right.
Then we can send it out. Yeah, but that's possible for sure.
Bernadine, what is the final deadline for reporting on expenditure of your PPP loan?
December 31st, 2020. So we go all the way to the end of the year. But it depends on when you received it and whether you choose the 8 weeks or the 24 weeks. So you have a covered period, and so it's really based on that, but you cannot go past December 31st, 2020. For your covered period, anyway.
Okay, I'm looking through the Q&A to see if we have any additional questions before we get ready to wrap things up.
And if anybody needs any additional guidance outside of the webinar, they can reach me at 301-318-4644. I will pull up my contact information, and they can feel free to contact me if they need additional guidance.
Well, Bernadine, someone's asking, are the FICA Medicare taxes, are they excluded or included in the payroll cost calculation?
You cannot include that in the payroll cost calculation. No, you cannot.
Okay, are there any other questions? Bernadine, you're going to put your contact screen up for attendees. And then somebody was asking, I guess, about specifying expenses when using Eidl like PPP, but I think you touched on it, but you just want to highlight again the Eidl versus the PPP, how these are two totally different loan products.
Yeah, so again, the PPP is just totally meant to be spent on payroll costs, rent or lease costs, and mortgage interest, and utilities. It's pretty much limited to what you can spend the money on, and they have that now at 40% of the amount of a PPP loan that you have received, and you can spend as little as 60% on payroll costs in order to to get the loan forgiven. Whereas the EIDL is totally a loan. It is a loan product, to help you with everyday business costs, and you can pretty much use it for whatever you would have used it for, had the pandemic not happened. So it's for everyday operational expenses, and it's not limited to just payroll and mortgage interest, rent, and utilities. So those are the two, and the Eidl is 100% non-forgivable, and 100% you have to pay it. You have to pay it back. But they're giving you very good rates. The nonprofits are paying 2.75, and small businesses are paying 3.75%, and they're giving you up to 30 years to pay it back. So it's it's a very attractive loan vehicle, for businesses who want to take it on, but you don't have to accept it. A lot of people are applying just to get the advance, and then they're not accepting the loan in some cases, but the majority of the people are taking it because it's going to be a very useful loan if you don't have to use it. And I guess you could eventually just pay it off. I'm sure there's no prepayment penalties associated with it. So if you don't use it, you just pay it back if you don't need it. But a lot of people are getting it and just putting it in their savings account, and just to see if they need it, because we don't know how long this pandemic is going to last.
Okay, good afternoon, everyone. This is Deborah Carter, and on behalf of our team and the outreach manager, Chris Kelly, we'd like to thank all of you for participating today. And I know a number of you have inquired about getting a copy of this presentation, but I understand that our featured guest, Ms. Bernadine Merriweather, would like to make some updates before sending it out to you. But certainly she is this is a very beneficial topic, especially during these challenging times. And in addition to that, she's certainly very knowledgeable in this arena. So I'd also like to thank Sandy Pruitt and Jerry McLaurin of the PFC and the PFC Black Chamber for co-hosting. We actually have 5 more webinars coming up in August. There will be none scheduled for next week, just to kind of give you heads up on that. So over the next few weeks after that in August, we will have 5 more webinars, and Sandy has actually put up the screen for you on the upcoming workshops. So you certainly stay tuned for the exact dates and times of these evites. And most importantly, there's also a survey that you will be receiving if you have not already received it. And we would greatly appreciate it if you would complete it and submit it back to us. And because there is a very important question on there as well in terms of what types of topics would you be interested in or hearing more about. So we look forward to your participation in the future, and please be safe and stay well. Sandy, do you have anything, or Bernadine, you have anything else to add? You have your contact information that you might want to put up one more time so that folks will know how to reach you. And we thank everybody for participating.
Again, this is Sandy. I'd like to again thank everyone. Be on the lookout for the upcoming workshops. And we look forward to working with you. And Bernadine, I didn't know if you want to add your screen again.
I did. I want to say thank you to everyone for attending the workshop, and thanks to Prince George's County, and the the PFC Black Chamber and the PFC Coalition for inviting me to present this workshop. I really appreciate it, and I enjoy sharing.
And we thank you.
Okay, thank you, everybody.
Welcome.
Have a safe weekend.